Hello everyone. Today we're going to talk about the UK Supreme Court decision on Brexit, then the market preliminary PMIs, Japan's trade balance, and the Australian CPI coming out overnight. This is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my opening market comment. We've got a fairly exciting day lined up today with several important indicators, and particularly the long-awaited UK Supreme Court decision on Brexit. The High Court last November unanimously ruled that the government needs Parliament's approval to withdraw from the European Union. It's likely that today's decision will just confirm that. Now, Prime Minister May has said she wants to officially inform the EU of Britain's intention to withdraw by March 31st, but it could take some time for the necessary bills to pass through Parliament. That would delay the whole process. The government might even lose the vote, in which case a general election would probably be called. A further complication will be if the court rules that the government also needs the okay from the regional authorities, such as Scotland's Parliament or similar bodies in Wales and Northern Ireland. Scotland in particular isn't likely to go along without a fight. That, in my view, would probably boost the pound because it would delay the triggering of Article 50. And the longer Britain stays in the EU, the better for the UK economy. Furthermore, it might make a hard Brexit less likely if the government has to compromise with Scotland. Before the ruling, though, the preliminary PMIs for the major Eurozone economies will be released. They're expected to be little changed. The French one is out already. That was little changed. Given that they're at fairly high levels already, that could be considered positive and boost the euro. Later in the day, though, the U.S. manufacturing PMI, the market PMI, is expected to rise further, and that too could boost the dollar. But the other two U.S. indicators that come out shortly afterwards aren't expected to be dollar-friendly. Existing home sales are forecast to fall, and the Richmond Fed Manufacturing Index is expected to be down. That would probably offset any enthusiasm for the dollar caused by a slightly higher PMI, and I expect it would leave the dollar little changed too, maybe even lower. Now, overnight, Japan announces its trade balance. This normally isn't a particularly important indicator for the FX market, but with the new U.S. administration concentrating on trade, it could start to come into focus. The market pays more attention to the not seasonally adjusted figure, which is forecast to rise. In theory, that should be modestly positive for the yen. But anything that brings trade surpluses to the attention of the Trump administration could be negative for the currency in today's climate. Also overnight, Australia announces its fourth quarter consumer price index, the CPI. The year-on-year rate's expected to rise from the extraordinarily low third quarter reading. As inflation moves back towards the RBA's 2 to 3% target range, the odds of a rate hike may increase and the Australian dollar strengthen. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.